The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here, host of the Tiger Technicians Hour, 877-927-6648. Love to hear from you. We're looking at the Dow down 105 at 31,992. This is a very important phase in this down move because, yes, there could be a one-to-one to the downside. In fact, let me just type this in. I was going to do that earlier, and then I thought, let's just wait and see what happens today. But so far, the day's acting very poorly. I would have preferred exactly the opposite, that we opened very weak and that slowly we were building strength to the upside. This is the exact opposite. Not good. Now, one of the reasons why we went short Wednesday at the open, just before the open a week ago, is because even though we have a long position, more intermediate term long position in the Dow Diamonds, everything that said that it was probably not a peak F/C, but a peak F at 34,281 on the 16th of August with the two doji candles. I call them silent doji candles because they occurred after the reversal, plus a chance that we might make that Chapman wave H pattern, dreaded H pattern, and fail. That was that Friday move, huge move to the downside. And look, after that, instead of having an oversold condition, oversold conditions get worked off overnight. And we land up, like now, we're down 153 in the Dow. So this is saying, and I believe that 31,800s at this particular point is really important, that absolutely 31,500, a close under that says, now you're going to have to reassess, is there going to be enough strength in that weekly chart, having given back about 50% of that huge gain from 29,600s to the 34,200s? That's not great action at all. The monthly chart is still in the process of it has made a new leg up. That's a leg, gray leg A, but it's holding okay. But this is going to be very important. And as I said, day's young. Wow, that was a quick turnaround because look at the futures. The E-mini Dow futures continuous contract at YM. Trading down, it went above yesterday's high and has now gone below yesterday's low. That's that doji candle. So either one of those says, be careful, because if it goes above, it means that open and close for the doji, the plus sign, the horizontal level, and that would be at 32,040 with a close at 32,075. That should have been support. That's my rule of thumb. You go below it and you close below it and it says, you know what, you've continued that trend. Be careful that this doji doesn't become a halfway marker. And that makes the close today really, really important. Did I say really important? I said really, really important. So let's go back to the S&P now. I did that during the market update at 10 o'clock. That's gone down below yesterday's low. This is leg C to the downside. We're now down 20 in the E-mini at 4,010. So what I say to subscribers, I don't see anything new that I want to get in. I believe that there should be some selling in the stocks that have been leading the way all the way into yesterday's highs or the day before in our energy sector. We did get a new stock today, but I didn't know how to get in because it had already gapped up a little bit early morning. So I said, we'll split it. I didn't really want to buy the gap. I was prepared to buy the pullback. Well, we bought it pre-market, and it then popped 20 cents. It popped about almost 3%, and now it's pulled back sharply. But my reasoning was, I like this particular sector, even though it's extremely whippy, and I have to do the one where I get in a split position. Maybe we only get one, maybe we get both, or maybe we get taken out. You just don't know. So because I liked it, we got in slightly higher than I wanted, but now I've also got a split buy. The second part is much, much lower down. We aren't there yet. I'm actually hoping we don't even get it. I don't mind having a smaller position that works than to have a larger position when it's in the energy sector. When the energy sector is starting to pull back, look at this. Leg C in crude oil pops to 97.66 in the continuous contract. It's now 92.34. It's down 465. The volatility that we're beginning to see now, especially in some of the commodities. I mean, look at gold. Gold is down 8 after a pretty decent, not a great candle, but a pretty decent candle yesterday. Look at silver. Silver is down even more, almost taking out yesterday's low. It's at 1847. High-grade copper I haven't looked at. Look at this, peak E. 3 days ago, doji candle, peak E in the Chapman wave methodology. That's where you've got to be careful. And now it's down from the 378 level to 355. So, and the commodities, let's look at wheat. Wheat is in a leg C. It's down 11 ticks in the continuous contract at 831 and a half. Actually starting to move very nicely. Wheat is, in the monthly chart, wheat is just turning the corner, and the monthly chart is really quite ugly. If you look at soybeans, lousy action today, down 26.5 at 1411.5. Peak D, this is that pattern we've been looking at. There are so many charts that have this Chapman wave inside arch formation, the H pattern, after a spike, the flagpole spike, going to a peak A, then sharply down, but doesn't take out the left side low, then starts a mini peak ABC, which says you could go to a D in a stair-step manner in the arch formation, going to just under, right on, or just above the previous high, or the previous high in the continuous contract on the 29th of July in soybeans was 1468.5. The high at peak D on the 24th of August was 1484.5, 2 points lower, and now we're down sharply, down 26. This is coming back, and if it goes halfway into the rectangle formation, which is now just below, there's a good chance it's going to test the low, and that's in the 1360s. So we're watching that closely. Looking at Con. Con is trading in leg E to the upside in the same rectangle formation that produces a lopsided cup that says you can go to the left side high, just under, right on, or just above the previous high. In this case, the high that we looked at for the first big move up was 674.5. That was 24th of June. Yesterday's high was 683.75, and now it's pulling back a tad. But the bigger picture says corn should try to work its way towards the high of the 17th of June in the continuous contract of 712.5. So it's acting well. And in the DB Agriculture Fund, which we are long, in that particular fund, we also have soybeans not acting well. It's in a rectangle formation, really just going sideways, stuck at the 200-period exponential moving average. Going to be monitoring that very closely because it's part of the DB. DB right now, I had a question about it, is acting quite nicely. It went above the 200-period moving average, but that magnet, the 20.40, I think it is. 20.55, and it's at 20.68. That's like a magnet. So it's going to take a little bit for the grains to really move higher. I'll be back in a moment. Basil Chapman, Dow is down 144, S&P's down 20. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so just as I'm about to go and talk about the dollar, let's just do this because this came in and I've never actually seen this, so out of curiosity, the question was, could I do an analysis of MSOS? MSOS, I've never heard of it. So MSOS turns out to be advisor shares. Is advisors? Yes, advisor shares, pure U.S. cannabis. It's like, I guess, an ETF, and it's trading at $13.42, down 16 cents. But unlike the MJ, which is the alternative harvest, which is just going nowhere, it's just, it looks just pathetic. MSOS, and thank you for bringing it to our attention here at TFNN. Listeners would like to know, is there something working in this whole area? Because a stock that we were trying to get into the other day and it didn't work, CGC was at a peak. It did have a nice rally. It looks a little bit like this chart, but the monthly chart is just horrendous. As Canopy Growth is trading at 3.68. So let me go back to keep your eye on the middle chart, the weekly chart. SOS, look at this. Here we go. Also leg B. In fact, it looks a little bit like that in the daily chart. Let me just open this up a little bit there. So this is very interesting. So I get a question, and if it's something I've never done before, I just quickly start typing in all my notations, Chapman notations, and at the same time, I'm really looking at the daily, weekly, monthly, or maybe the 120 chart, and only then do I actually look at the price. Sometimes I'm busy typing away. I don't even know that it's a stock trading at $1.10 or it's trading at 1,010. It just makes no difference. I'm doing the homework, and when you do that, and then what you do is you're looking for patterns, etc., etc. You're not really getting swayed by the price movement based on the price of the tradable that you're looking at. You're doing it just on the patterns. Well, lo and behold, as I'm talking, I'm doing all of this. And here you go, left side, right side, price, time match, says that it's a day later, by the 9th of September, this vehicle should try to trade towards 1420, 1435. Between the 1420 and 1435 level. It is making higher highs and higher lows. Let's see if I can do the Chapman inside wedge target resistance line. Yep, I can. I'll do it like this, and I didn't want to add the extra day that I needed to the space on the right. Yeah, so far it's acting very nicely, and it's not great. If you look at the weekly, monthly chart, certainly was an IPO back in 2020 in the 20s, screams up to 50, 55, plunges down to the most recent low at about 10. What was that? Doubled bottom at 10.08, 10. 11, yeah, 10.08 was the low that was around about the 27th, 28th of June, and it's been working very nicely since then. So this is very different to the overall MJ, that's the Alternative Harvest ETF. So yes, I do like it, and yes, it has targets to the upside. And the weekly chart, for the first time since it broke down with one close above the 14-period moving average back in November of 2021, at about 29 to 32, and was it. It's hit it before, but it's never closed. This is the first time. Last week was the first time that it fractionally closed above the 14-period moving average. The 9 is working its way to improve. So yes, this is on the improvement list. I wouldn't get too carried away at this particular point. I would have to do an assessment of many of the others. Now, remember, the one that I've spoken about for years, we don't own it, and I don't know why I didn't actually stick it in when we spoke about it, and it had that major decline to the 210 level. That is STZ, which is STZ is a symbol for Constellation Brands, and they have everything. I mean, they have everything in the liquor sector, and they were champions. They just did it. It was unbelievable how they went to the April 2018 high of 236.62, and very soon after that, I remember reading. I said to subscribers to my opening call, here's a problem. This is one of the great stocks on the exchange, and now it's about to go into an area it's never been in. So it needs to pull back really sharply. And then I believe very strongly they took over one of the companies, cannabis companies. I said I believe very strongly that they will do what they did correctly in the spirits area, and they will go into the cannabis as a under the umbrella of Constellation Brands, spirits, alcohol, and now cannabis, and they'll get it right. Out of all the companies that should get it right, they should get it right. And they've made a peak D in the daily chart, STZ. So whoops, that was the wrong way around. Sorry. Put it on that side. And they've gone to a peak D, and they're busy pulling back here a little bit down at $1.11 at 249 today. But this is the one. So you're getting, it's kind of diluted if you're going for just the cannabis, but they did everything right over the, not years, but decades, to be able to squeeze out profits all the time. And then they got hit with that takeover, and then, of course, just the general market malaise. So that's an area that I would be looking at. The monthly chart says it could be stuck in a trading band for a little while, but it's holding very well. And it's almost like a defensive stock. I don't know if they even pay a dividend, but it looks like a defensive stock. But that, to me, is the one that is better. So maybe MSOS has Constellation Brands in it, because that would be a certain stabilizing factor. So as we're looking at it now, yes, this could be a peak D, and alternate account C1, C2 goes to underneath there. It goes to peak A. A penny can make a difference. I must make an absolute check on this. The high of the 8th was 12.13. And the next one was 12.32. So that is B right there. And this is C. So we're at a peak C. It should go to a D, just squeak above. But as I say, that 1440s is kind of the target here. So yes, I do like it. And I know that the person who asked me is a very long-term position player, wants to set in place money that goes into the potential for long-term returns. And this does fit that category. But at $13.42, if it just goes back to a week ago, $11.50, that's a point. And a point says that that's 8%, whoosh, just like that. No, what am I saying? That's more. Yes, I mean, you're talking about percentages. Does make a difference. So you have to scale in, I believe, building a position. But I wouldn't get the full position at this point. I would not have a full position in MSOS. I'd be building the position. Hope that helps you. Next question. Let me just go through these. I'm not skipping any questions because I want to get to the dollar. Okay. So, let me, as I'm going to the dollar, to follow up on a question about the E-mini. Yes, I had typed in, it's very interesting. I can't believe I still don't even hold that. But I typed in way back here at 6 o'clock when I was up and doing some work, AM, that's Eastern time, at about the 465 level. I put in here Chapman wave. It's already done. Look at this beautiful bold formation with the left side, right side price match to the exact 10-minute bar of the breakout to peak D at the high of 4,072.75. And then I made the cup formation. Then I drew in strong, weak, because that was much weaker. And then I put in here, I'll tell you when I get back what I typed in. I'll be right back. That was done.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, so we're back for the ESU 22 10-minute chart, September contract. I typed in 4,039 by 930. I used the left side low, and that was right there. The low of 2:20 a.m. at 4,039, and then I took a left side to the right side price time match from a particular bar to the high at peak D right there, and I said, and this was right at about there. So I said, 200 period moving average. In fact, we hadn't gotten to the 200 period moving average yet. Wait, it was 6 o'clock. Yes, and we were right there, and I said, this is much weaker. The vertical line from 4 at 4:30 a.m. with a high of 4072.75, went down to the 14-period moving average, made a cup formation with the left side going 1, 2, 3, 4, 5 bars down, and then 1, 2, 3, 4, 5 bars up. Just failed to make a new high, and look how weak the technicals. Look at the MACD. Look at the stochastic. But the 9-period moving average was still way above the 14, and that said to me it will take time, and therefore I'm going to do a left side, right side price time match to the 39 level, and I typed in 40.39 by 9:30. Well, at 9:30. Was that 9:30? Right, there's 9:30. 9:30, the low was 40.42, and the very next bar went to 40.35.75. And then I didn't even think this would work. I had a left side low of that low that was made at 2040. That was yesterday at 8:40 p.m. At 40.26.75. I was already not even thinking about it because I was doing many other things. And look what happened. We're still going down. It's down at 39.96. So the 200-period moving average way up there became an incredible repellent zone. The arch formation, look at this huge arch formation. So this kind of weakness today, down 201 now in the Dow, down 31, the S&P. This is the exact opposite of what I would like on a purely sentiment-based look at the markets, to say, you know what, I would love to see a sell-off early on and then a slow, quiet build so that by noon you could get a chance of a double of the noontime price. So if we were weak, let's say we're down 35 in the E-mini, if we were only down 13 or 12 at about noon, or 12:30 p.m. Eastern Time, there's a chance that we could have a rally and double that by the close. This is not great. Okay, so now I want to talk about the dollar. So the dollar, just for clarification, as subscribers have been long since 2018 at 90.07 with the UUP, the dollar bull ET, it's called the fund. And we watched it go all the way to the high of 102.99. We only took one little bit off once. And then there was this long-legged doji. And I said, if we close below this low of this long-legged doji, that's a real problem. Well, we did. And we went down from the March high of 103, let's call it, down to 89.21. And that was January of 2021, and then we started a brand new peak A. It retested successfully, and then continued leg B, leg C, and now we're still in leg C. And that just says to me, in the Chapman wave, I haven't shown this for quite a few days, the concept of the whole premise was originally called the Chapman wave 7-wave form, because years ago I discovered that I used to hand chart, and I discovered that when you get to this fourth highest peak, other things can happen. That was peak D. Peak A was the first peak, a higher leg up starts leg C, legs B, and then leg B becomes peak B, etc., until you get to D. And that's the one that was really key. And now what we're looking at is within the concept of the dollar, this particular pattern here, where you identify the low bar and then you count each successive peak, we're in this leg C. There should still be a peak C, and sometime in 2022, there should be a move to a leg D. It doesn't tell you how high. There are other techniques that do that. But in this particular case, we're still in leg C. You have to wait for the entire month of September to see if there's a lower high. And this on a very short-term basis, you're looking at the dollar. There's no other way I can count it. This was a leg C. If there's no new high above yesterday's high of 109.48, then this becomes a peak C, and then you've got a couple of days to go. Certainly, if there is a move on, so August wraps up on Wednesday tomorrow. Thursday begins September 1. So if by September 1, we haven't gone above 109.48, but on September 1, we go to 109.49, that means the whole month of September, this monthly leg C is in place, and you can't get a peak C until all of September is finished. Then you have to wait for all of October. So it's the end of October that you can officially get a peak C if anytime this week we go above after today. No, after tomorrow. Anytime from Thursday, if there's a new move up and we haven't taken out 109.48, but then we do, that goes to a leg D in the daily. There's a doji candle so far, leg E, and everything about this is suggesting that the daily chart has good strength, not as good as it was back when it was going to 109.29 the 19th of July, but it's made this Chapman wave left side, right side price time match. And now you have to look for another point, but there is no other point because this is new. Look at this. This is multi-decade highs. Look, multi-decade highs. This goes all to 211, 210. Where can I go to? I have to go all the way back to 121. Is it still 121? Because I don't think this gets smoothed out. It should be. Yep, 121, round number high, July of 2001. With a double top. There's the pattern we just discussed now in the S&P 10-minute chart. Look at this. If you do, like Tom O'Brien likes to do his volume assessment, a vertical volume assessment. If you do that here, look what happened when it made the high back in July of 2001 and then retested, I think it was January of 2002. Look at this. Look at the MACD is failing. Stochastic was weaker. And within 4 months, you crossed negative on the 9 under the 14-period moving average. So 121, and we're trading right now at 108. So as it stands right now, that whole area of the teens, that's my target for 2022. I wouldn't be surprised in the big picture. How many times have we seen double tops within pennies, whether it's days, years, or months or years. So we'll see what happens. But look at this left side, right side price time match. You've gone in a shorter distance for the right side of the W formation. The second U has broken out. So the dollar so far, so the question was, are we making potential really serious top? And my answer is, in the short term, if you have to look at the EUR USD is doing the opposite to the downside. We had the cup formation, the arch formation, dreaded H pattern. Every time it's failed and made a lower low, it's done that again. It's done that in the daily chart, and it's at 0.9992, almost just under par. You're looking at the euro-dollar currency pair. That monthly chart is not looking great at all. Flat stochastic at 10%. The weekly chart is just showing signs that the histograms start to 10. But wait a minute, look at this, USD JPY. This is the yen. This is the US dollar Japanese yen currency pair. And leg D. I'm not going to rush this. We'll be back. This is really, I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi everyone, we're back. A question came about the UVXY. I'll get to that in a minute. I'm just doing the notation, but let me just say the USD JPY is on a leg D in Chapman methodology. The objective is to get to at least a D. It can go higher, but D is your objective. And here you are in the daily chart in leg D. The left side high that would be the target is 139.389. The high yesterday was 138.99, so just a little under it. The MACD is strong, stochastic's very good at 92%, 9's way over the 14. Everything here is positive, but look at the weekly chart. The price is double topping. I shouldn't say double topping. It is testing the high. The MACD was really strong in that high that was made back in July. It pulled back for 3 bars, and now this is the 4th bar up, and it hasn't quite broken the high that was made on the July, around about the 12th, 13th. But look, the MACD is still underneath. It's a little weak. The stochastic's under 80%, 76%. 9 is way above the 14. That, to me, is the priority, and that's the thing that says this is still very strong. And since the yen and the dollar, and of course, the dollar currency is made up of other currencies. But most importantly, look, the yen in this beautiful bowl formation, basically a successful H that turned into a U, has broken above the target lines that I had put in here of about 134. Is that 134? Yeah, 134.87. It's now above that. And this is the monthly chart. And look, the stochastic is flat at 90%. Remember, the rule of thumb, as far as I'm concerned, is that a stochastic above 80% is what you want if you're bullish. A stochastic above 88 to 92% is very good. The stochastic holding in the 95 to 97 area is fabulous. That's what you want to see, except it's telling you that the next big move could start to see a pullback. But as long as it's holding in the 90% area, that's great. Well, 90.75 in the monthly since it broke above, and that takes you to, I'm going to go with the red line, which is the slow-moving average. That takes you June of last year. So at this particular point, over a year, with a stochastic like that, it doesn't usually last, right? It doesn't mean to say that the price has to fall, but the stochastic at a certain point does get tired. Tired does not mean major sell signal. Look what happened when it got tired and went touched the 80%, went above it, and then went under it, and then went above it all that whole 2013 through 2015. Look what happened. The US dollar Japanese yen currency pair walked the green 9-period exponential moving average and never let go until it broke down right there, March of 2016. and then it just never got back there until just recently, March of 2022. I would say that's 6 years. 6 years to get back. But look, a rectangle formation can last a lot longer than your patience, and that's what we had. Finally, it found support as the MACD accelerated higher. Stochastic went above 80%, actually went above about 83%, and that's where the price accelerated. So I don't see, unless there's something that's going to happen now that is extra economic. In other words, it fits a category that says, this is aberrational. This is just impacting the dollar and the yen, and that means that the euro can finally take its turn to the upside. And look at this monthly chart. Remember, I'd drawn this in ages ago. The monthly chart made a beautiful arch formation. The second arch formation, almost the opposite, where the arch formation went to an M. So the H went to an M, and then it broke underneath the left side low, and the stochastics at 10% and just stuck there. At some point, it's going to go over 20%, but it hasn't yet. And look, the MACD is very weak. The histogram hasn't even started to improve. So my contention is that the dollar still has a lot of internal strength in all time frames, but that the daily internal strength is getting a little soft. It's a little extended in time and somewhat in price. That doesn't mean to say you have to crash. It just says maybe we're getting close to some kind of a top. Look at the UVXY. This is 2 or 3 times Ultra VIX short-term volatility index, trading up 48 cents at 10.78 at 4.51. This breakout now hasn't got the stochastic at 80%, but it is 71%, and the MACD is good. And I'm going to suggest to you that the VIX, UVXY, and let me just see what the VIX itself is doing, is kind of, for the first time, I'm going to say, this is in play because you've got a leg D up in the volatility index. The inside track propellant zone, which became a repellent zone in the weekly chart. This is that falling axe formation right there, but upside down. Look at that. Look at that beautiful inside track propellant. Then all of a sudden, since July, there's a weekly chart, it went under it, and it closed 1, 2, 3, and it was even down last week underneath this inside track propellant zone, and now it's moving higher. And the MACD is just about on the weekly chart to cross positive, and the stochastics getting to, it's 18%, but it's getting close to above 20%. And that's the reason why for subscribers, I said, we're just holding that DOG. We are, maybe for longer term positions, we're canceling out those beautiful gains, some of the beautiful gains that were made in the diamonds, but we got in at such a low point. I don't want to get in and out and in and out. Let's keep that. But for those of you who are interested, you buy the DOG to ameliorate the sell-off. But for those who've got the DOG or cheated it, didn't buy a small position but bought a big position, you're now making money on the downside. And that's what I wanted to see. So the DOG is still in play, meaning that the short side is still in play in the diamonds. Let's just go back to this because this is a much deeper move. We got taken out of a small position in the QQQs, which actually had a really nice couple of days of gains, but they got taken out. I just, off the top of my head now, I can't remember. I thought I'd raised. Let me just see that. From talking apples to apples, I need to do that. Yeah, okay, so we took a little profit, and then we took a little loss. So we kind of, maybe just a tad more loss than gain in the shorter term position in the QQQ. But look at this. The 1-to-1 that I just drawn in for the Dow, you've done the 1-to-1, extended that a little bit more, and most importantly, we're now in this area which I had said, 31,696, and I said 31,500 is going to be absolutely key because a low from 29,653 to a high of 32,653 to 34,281. Yeah, that's 3,500 points. That's a huge move up. Wait, is that more? I'll do it during the break. But that was a huge gain. But look how much we've given back. down at the 31,692. Okay, this is giving me an opportunity to just do a little. I'll be right back. Basil Chapman does have 400 points. It's plus 61, and we'll be right back. A couple of just
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Also for this final section, a couple of things. The GDX, which is the Gold Miners ETF. This is, once we went below 25, it was just saying that the chance of at least a turnaround on the technicals and the daily chart were diminishing. And certainly the gold contract monthly chart has just made lower highs and lower lows, and that tells you the trend. So it's going to take something it's going to be a sudden news event, and all of a sudden that's just going to spark gold in a different way. Because at this particular point, just on a chart basis, it's saying that the candle, the low that was made on a monthly basis, this candle after the low that was made on the March of 2020, 1618, that next candle was with the low that basically was at the open of that was the open of the month and the close of the previous month at 23 round number low. Wow, if we take that out, you go into this long wick. If the long wick gets taken out somewhere around 1980, If there's a weekly close below 1980, that's just something completely different. So I'm looking at it and saying, within the next 3 sessions, going to the beginning of September, gold has to find some reason to rally, and the GDX is really the issue. I prefer to see the GDX move rather than gold itself. So I needed to cover that. And then the UVXY, even though the VIX is in leg D, if the VIX index, which is at 10.63, can fall between now and 2:15, 2:20 this afternoon, under 10 point, it needs to get down under 10.48 because it's a really strong rally. That'll help the market. But if it's holding here in the 1060 or even goes higher, that's just going to keep the selling pressure up. My look at everything right now says we are very close intraday to the moment that the bulls have to show some tenacity and move from Dow down 323 to a minus 180 by the 2 o'clock, 2:30 period. Have a wonderful rest of the day. Stay